New private home sales last month marked the strongest January showing in 7 years. This comes on the back of sustained buying momentum from previous launches. But analysts expect sales to dip going forward as fears around the COVID-19 outbreak takes a toll on the market. Cheryl Lin with more.
Resilient buying demand last year extended through the new year to January, carrying the month to its best sales performance in 7 years. Excluding executive condominiums, 618 new private homes were sold in January, up about 15% from December's numbers. It's also over 40% more than the units sold in the same period a year ago.
It really is an extension of how the market is trending. We see that there is stronger sales. A lot of people on the sidelines, they are returning.
A large part of that demand was for existing projects. The top-selling projects were Jadescape, Treasure at Tampines and Park Esther, which all bested sales at new launches. Analysts note that this was because these mass-market projects are more affordable for a broader audience, compared to the new launches, which have a higher quantum. The numbers for January were relatively strong, as analysts say the outbreak of COVID-19 had yet to make its impact felt. But going forward, they expect a dip in overall transaction volumes as concerns about the virus take hold.
Buyers will be a bit more cautious about viewing properties and show flats because of COVID-19. For those who feel uneasy, they may decide to postpone their purchasing plans. This could have the effect of moderating the overall transaction volume.
The other problem is that a lot of buyers currently have expectations of price decline in the upcoming few months because they feel that the whole COVID-19 will have a big impact on the economy and hence house prices. So that will also impact on the transaction volume, because there will be kind of a price gap between the buyers and the sellers.
Experts say a decline in property prices will depend on how severe the outbreak gets and how long it will last. But opinion is split on whether the COVID-19 outbreak will hit harder than the SARS epidemic in 2003.
Transaction volume in first half 2003 fell by about 50% relative to first half of 2002. But the situation now is different. I think Singapore is much more prepared and the mortality rate is much lower than SARS for COVID-19.
As China and Singapore's economies are more connected now, experts say any knock-on impact from the second largest economy will be more keenly felt.